Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to continue from yesterday's video and look at the candlestick pattern developments and to see whether the major levels that we've been talking about have been broken or not. I'll also have a look at the wider markets in terms of have a look at the Dow Jones Index, the HYG, which is the junk bond market, and I'll have a look at the dollar as well. But before I begin, just the usual disclaimer, please remember all my videos and all the information I have in all my videos are only for educational purposes only. Nothing should be taken as financial advice. I don't have a crystal ball, so please do your wider research before making any investment decisions. So with that out of the way, let's get cracking. And I'm going to start off with the Twitter page. For those of you who like the Wisdom Bite section at the end of each video, I've started to post a few of the stories that I used to give you. I've actually posted this amazing little film from the Chicken Soup for the Soul stories that came out in the 1980s. It's an amazing story, the message of which is to be really grateful for the time that we have here and to make each day count and not to waste this life on being sad and miserable. You have the power to choose to whether to focus on the pain of an event and be miserable, or to focus on learning from it and look forward to moving on, being bigger, better and wiser. So have a look at this video. It's only about 7 or 8 minutes long, but it'll transform your life for the better. But I've also left a little note saying that you may need some tissues because you probably will. And if you want to go to my Twitter page, there's a link below all of my videos that you can click onto and to actually follow me there. Okay, back to the charts. We get rid of all this. Firstly, I'm going to have a look at the 21 simple moving average. This is one of the resistances that's actually coming up for the price relief rally that we've been getting recently in the last 7 or 8 days. So this is the first line of resistance that we've got on the 21 simple moving average. And above that is the 50 simple moving average, which is currently at around about 43,000. However, when I put the exponential moving averages, you'll realize there's other resistances along the way here. So these are the three very important exponential moving averages on the daily chart. This is the 8 EMA, and as you can see, we've had 1, 2, 3, 4. We've now got 5 above the 8 EMA. So obviously this is showing quite a lot of bullishness in the market. However, as we know that even if we do have quite a few closes above that, it's no guarantee that we're going to go to the upside because we've had these relief rallies before, and it may well be that this is the prelude to coming back down. But certainly in the shorter term, we are seeing quite a bit of bullish pressure there. And it looks like we've got rejected at the 21 exponential moving average here at around about the 39,000. But just above it, as we know, we can get rejected at the white line, which is the 34 exponential moving average. And that is currently at 41,000. So there is quite a lot of turbulence along the way, which is making it difficult for Bitcoin to get much higher. But as usual, the horizontal resistance lines are the most powerful levels to consider. So this is really where we're really at. This level's at 39,600. This is at 40,000. And we've just come up to those levels here. So we may have a little bit more to go in this box here. But certainly with this very strong level of resistance at 40, and really to reverse this downtrend we've had for over 3 months now since 69,000, to really reverse that, we need to flip this level here. We must get above this, come back, retest it, and then start going and break the level that we've come up to. So that's really what we're really looking for a proper reversal of this downtrend that we've had. I don't think we're going to get all the way very, very quickly to this $45,000, $46,000 mark, which is the next level here. So even if we do get above this 40K critical level, it's going to be very, very difficult to get past this in the first go here. We may need several attempts at this before we can break this through, because there's just so much problems of resistance here, as we can see. Only time will tell, but we must be aware of these two major levels that we've got to really get through first. Before I go into the micro analysis of the candlestick patterns that are developing on the shorter time frames, I want to just refer back to the other markets that are around that we really need to be aware of. And the Dow Jones Index, as we know, the chart of which stretches back all the way down here to the 1890s. We are currently in this band since then, and this is currently where we're at. We just need to be aware of where we are here. So this is the blue line, which is the long-term Dow Jones Index line that stretches back over 100 odd years. As we can see, clearly we're well above it and we're well overbought in this market, and we keep coming back and testing this. And the more you test a resistance or a support, the more likely it's to go through. And this is the worrying bit here. And as you know, if you've been watching my videos, I've drawn these three levels, that this is where we get concerned. This is where we have to take a special note. And the green line is where it's going to break and then we will have a crash. So we came very much perilously close to it over here just a few days ago on the 24th of January. But as you can see, we had a mighty bounce back up again, and we're now on this little rally that we've got here. So everything seems intact. We've come back and found support on exactly those levels which I've drawn here for many, many months now. But keep your mind on this. We need to be absolutely sure that we're not breaking through these levels here, because that would actually trigger off a Dow Jones Index crash. And for that, we need to go to the junk bond market. And for those of you who've been following me for many, many months now, you'll know that I've drawn these two critical levels here. And over the last few weeks, we have been getting support at these levels, but recently in the last few weeks it's broken that support here. So this is getting quite concerning, because once we break this level here at 83, it may well be that the panic button might be pushed in the Dow Jones Index. So this level really coincides with this level of support, the higher lows that we were making. So this is really the first port of call. Many people will look at this break of support line as the trigger to get out of the market, and that may start a domino effect. So initially we might find support at this level here at the 80 level, but certainly we don't want to break this 80.7 mark here. A quick look at the dollar. We're finding resistance at this point at the moment, which I showed you in the last time we covered this, coinciding with this level of support and resistance, and this, etc. And I drew this Fibonacci retracement level and said that the 61.8 is a little bit more to go. So we may still have a little bit more to go for the dollar before it starts coming back down again. And this potential to go higher may well be the catalyst that brings Bitcoin down. As you know, there's an inverse relationship between the two. So let's see what happens. We're certainly finding support at the 50% level at the moment, but there may be a little bit more to go towards the 61.8 for the dollar before it starts to turn around back to the downside. Okay, so a bit of micro-analysis for you. As you know, I've been mentioning this particular candlestick here, the gravestone doji that we formed on the 26th of January. And basically, what we have to do is we have to look at the top of the wick, which is at 38,960, and the bottom of the wick, which is at 36,254. And as you can see, this candle is still having an effect on all the price action here, simply because none of these candles has managed to close above this level or below this level here. So this candle is still at play. This is still affecting all the price action over here. As I've mentioned in the many last videos now, we've got a 20% probability that we're going to break to the upside to take us to this zone here. And we have a 80% probability of breaking this level here at the 36,254 level and bringing us down to this level of 34,600, which is the 50% level of this hammer candle that we made on the 24th here. So let's see which way it goes. Will it break the top or will it break the bottom? These are the probabilities that I see. And the reason for those probabilities is because, as you can see with this candle here, it is a gravestone doji candle, and gravestone doji candles are bearish in their nature, and they're usually found at the top of a trend, and they have the power to bring the price back down. But certainly at this level here, at the 40,000, we're really setting up for a rejection somewhere along this line here. And if we don't get a rejection here and we do manage to get above it, then we really need to pay attention then, because then that will tell us that there is some very strong underlying reversal taking place here. Okay, so we'll leave it at that for the time being. Thank you very much indeed for watching. And if you found value in this analysis, then please do remember to like and subscribe and to turn on the notification bell. And if you want to follow me in between the videos, then please do remember to go to the Twitter page. The link is in the description below the videos. And if you've got any comments, questions or suggestions, then please leave them in the comments below. And until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.